We're back.
Back. How was your day?
Very good.
So happy to be here.
Again.
Thanks
for wearing your outfit properly.
No, thank you for wearing your outfit.
Yeah. Without further ado.
Wear it?
No, sometimes he forgets to wear it.
How can you mess this up?
He forgets to wear it, and then I'm the only one with the logo. But I've done it to him too. So we give everybody a bad time about it.
Yeah, we have a guest today.
Yeah, we do. Surprisingly, no, everybody should know that we always have a guest.
Thank you.
Tiang, welcome.
Thanks for having me.
Yeah.
It's been a while.
It has been a while. Kind of catching up over a podcast recording, but that's okay. This time around, I get to introduce you as a venture capitalist, which is fun for me.
Imagine that.
History, we worked together. We'll just clear that like a disclosure. Seed Plus. Kind of knew each other a little bit before, but actually not that much. Seed Plus, part of Jungle, Evernote, Stream Media. Defunct, but that happens. Lots of board seats. I couldn't even put them all on one piece of paper. Mito, which I've used before. It's cool. I'm impressed with their US traction. Koala, which we share some history in that together. Headquarters, Vouch. There's a bunch. I just named a few. You're running Forge Ventures. Correct.
Affirmative.
Yeah. Just making sure we got the right Tiang. So we'll kind of get into all this and kind of learn about it and, some history as we always do. So let's kind of wind the clock back to how you got to Singapore and how instrumental kind of Singapore and NUS has been to where you've gone in life.
Yeah. It's I was born in Malaysia, moved here when I was 15 on a scholarship. Actually did high school here. Went through high school, went through junior college, went to NUS, which is a National University of Singapore. So pretty much the product of the system. And
closer for you.
Yeah. Thank you. So
all good.
Did my bachelor's degree in mechanical engineering. I was an engineer. And pretty much the product of the system, like I said, right? One thing that really, I guess in no small part changed my trajectory of my career was going on to the NUS Overseas College program, NOC. And for those who don't know, it's a one-year program where NUS sends students overseas. In my case, I went to Silicon Valley. I was attached to Stanford University for a year, did schooling there, but at the same time, interned at a startup in the Bay Area. During my time, I was interning and working at a medical device company, working on, stents and catheters, little tubes that you put into your body. For
very important pieces of machinery.
Okay. And I was designing and building the machinery that manufactures that piece of equipment, that piece of tube, right?
Wow.
So did that, It's also a really interesting timing. I was there in 2009 after the global financial crisis. Really interesting because, how history doesn't repeat but rhymes, right? It's the same feeling that I'm observing here today where there's a lot less noise in entrepreneurship, but folks who want to build, they have high conviction, right? And it's clear out a lot of noise from the ecosystem. But what remained behind was high conviction entrepreneurs who are really working on interesting ideas, And I was there in that environment in Silicon Valley in 2009. It's also incidentally the year where right around the concept of the lean startup movement was being kicked off. And the guy who wrote that book called 4 Steps to Epiphany, I think that's the title. He was my lecturer in Stanford.
Oh, small
and
world.
he was using that book as his course material to kind of and build content around it. And every week we have a guest lecturer featuring names like Reid Hoffman. Big deal, but wasn't that big of a deal back then, right? I think LinkedIn just closed a Series B at the time. Mike Maples Jr., who subsequently co-founded Floodgate, right? He was the original micro VC, right? It was that kind of an environment, right? And that really, I guess Gen Zs will call it altered the brain chemistry, my brain chemistry, and it really taught me a really different view of the world beyond, what the Singapore system has to offer.
Yeah, because if you hadn't gone and you were just here, you would have never have bumped into any of that.
Right, I think it did a few things to me, right? Number one is that it made me realize that there are multiple options in life than management consulting, investment banking, and oil and gas or a semicon, right? There's no set template to that. There's more to that, right? And the other thing is that, when some of these larger than life figures appear in front of you, they're people. They're just people, right? And that made me at least realize that, there's a path that I can draw from where I'm sitting here today to where I can go to, right? Because it's people, right? They're just people.
Yeah. Does the American culture influences you, or?
I think so, in ways that I think that are positive. I think for one, it's this idea of manifest destiny, right? That you could really own your own trajectory, your own outcome, and have agency over your life, right? And you don't have to pick to do what everyone else does. You don't have to follow a predefined scholarship path, right? Not everyone needs to end up in the civil service, right? And you could just, do what you feel is right for you, So I came back because of that, decided not to be an engineer. I did try, I interviewed at, I believe it was Micron or AMD. I was led into a very dimly lit office, this 40-year-old.
Back in Singapore.
Okay. This was when I was about to graduate, right? Was led into a dimly lit room. This really tired looking engineer in his mid-40s, right? I'm like, I don't want to be that guy.
You're like, okay, my manifest destiny, I don't think it looks like
that's
this.
That, right? Yeah. So I was like, okay, then fine, try corporate. So I interviewed for a management associate program at P&G. And I didn't know I had to prepare for the interview. The first question they asked was, what's our 5 core values? I'm like, nope.
Oops.
Nope, right? So so that happened, right? Yeah. And I think I went back to what I really like to do, which is build, right? And the reason I picked up engineering back in the day was I really like to build and tinker with things. So I went back to startups, right? I went to startups. I took a job as an early founding team of a payments company, Stream Media, in Singapore, right? It's founded by a senior of mine. And that's how I knew you, actually, right? So we were working on payments, and the thesis was mobile is going to be the next big chasm, right? The next big tectonic shift in technology. And the big problem at the time was there's a high degree of fragmentation between different OSs. BlackBerry was still a thing.
What year was it?
2010, 2011, right? WebOS, right? HP's little experiment. Microsoft, right? Did to Microsoft's credit, I quite like Windows Phone, right? The user experience good, right?
You tell it to Steve Jobs.
Yeah. But imagine that they launched the App Store without a payment engine. And we were, I think, one of the first, if not the first, to kind of build commercial logic for the Windows App Store. Every telco had the idea that I want to own an app store too, right? So Singtel had one, M1 had one for reasons unknown. Samsung had one, right? So fragmentation was the thesis, and how do we build a system to kind of aggregate all of that and abstract that away from the daily life of a developer, right? So that was the thesis. Back then it was branded as a Series A investment, laughable because it was barely 1 million SGD, by the way. Today is probably like an angel round or pre-angel round.
Progress.
Right.
Progress.
And that got us going, right? Yeah. So worked on that for 2 years, But one thing we all knew was that how quickly the entire ecosystem just kind of consolidated, right? Very quickly it became apparent that it's only a 2-horse race. It's either iOS or whatever variant of Android that you pick, right? And being number 1 in Windows Phone doesn't mean anything, So tried to pivot, couldn't find a way out, and decided to kind of give up on the project, And that's where I went to a company called Evernote, started the office here, launched the product into Asia, built a team, and subsequently managed the region. And that's also when I learned how to really think about building products that are globally relevant, I
always wanted to figure out, were you an Evernote user prior to the job?
I was.
So you were into it anyway.
There was an interesting history. So when I was in the Bay Area, 2009 was when the iPhone 3G was launched, right? And I think the bigger deal, more so than the phone, was the App Store, which changed everything, right? And I'm sure you remember there are a lot of, I guess, entertainment-oriented apps, right? You have a beer drinking app, you have a candlelight app.
I had one.
Yeah, I'm sure you had one. Right. And the only useful app was Evernote, right? And it was the first time where you don't have to align your IR Blaster with your laptop to synchronize content. Cloud was increasingly becoming a thing. You could synchronize across the internet, and it became a godsend for a student. So I downloaded it, became a fan, and started using it. And as luck would have it, I was attending a Thai conference in the Bay Area, and one of the speakers was a co-founder of Evernote. Got his card, cold called him, and said, "Hey, I'm a big fan. Can I come over for some T-shirts and stickers?" I heard an audible sigh from.
Oh God, another sticker guy.
Another one of those, right? we're having burrito Wednesdays. Why don't you come over, right? So I drove myself over to kind of warehouse in Mountain View. It was I think one of their first offices, and had burrito, grabbed a bunch of stickers and T-shirt, and met the founding team. And that's where the seed and relationship was planted, right? So fast forward to post seed startup, got a call and say, "Hey, we're expanding to Asia. Are you interested?" I was like, "Please save me from myself because I don't know what I'm doing." So that happened, right?
Yeah.
So yeah.
Got it. So you were a user before.
Yeah.
Do you still use?
I do. I mean, it's been through a journey. For one, I mean, I've invested so much of my content and life into the product, and it's just worked for me. It's a bit of a bittersweet moment when it was acquired by the Italian, I don't know what to call it, maybe a PE firm, right?
Yeah.
Bending spoons,
Yes.
right? It was a bit of a bittersweet moment because on the one hand, it's like, yeah, it's end of a chapter, right? But on the other hand, I see the pace of innovation picking up right now. The product has gotten a new lease of life, and I'm very happy as a user today, So
I kept thinking we needed to stage an intervention and
yeah.
teach you about Apple Notes or something, but sounds like it's still working for you.
I tried Notion, I tried Apple Notes.
I think you've been
but,
on it for what, a decade or more?
Yeah.
You can't move.
Yeah, it's
For
since
me, it's
09.
hard to move from Apple Notes. It's
Yeah.
like always coming back to Apple Notes.
But I do think Apple Notes is a great product. I tried it. I use, in some form and fashion, Apple Notes with my wife as a household kind of.
That's good for sharing.
Right?
Yeah, it's good for sharing.
And it's nice that everyone in the household is on the Apple ecosystem, right? That works beautifully.
Groceries, man. Groceries. Add an item.
Yeah.
Did you add an item? This is our conversation.
You gotta have that. Right?
Yeah. You said startups, and
Yeah.
it gives us the atmosphere of the
Yeah.
Southeast Asia ecosystem have been evolved in the past decade, and you saw it in your own eyes.
Yes.
And I'm sure there are some things that either you can speak about or change about, or how do you see what's your guided strategies, for the future or for the present in this ecosystem?
No, that's a lot to unpack, I mean, for one, I would disclaimer here is that, a lot of the work that I did up to this point was pretty accidental. There's no like grand strategy or what have you, right? Even making the career pivot of becoming a professional venture investor is a bit of a happy accident, right? And I consider myself really fortunate because I think it's such a privileged position to be in, and also having besides venture investing as a profession that pays the bills, is having the front row seat of looking at technology evolution, the ecosystem, the maturing of it from 10 years ago to today to hopefully beyond, right? When I think back to the really early days of, the seed startup, right, where there's a little ecosystem brewing around NUS, actually, a lot of the entrepreneurs have their first careers from within the NUS ecosystem. It was just a handful of us, and we're incubated mostly within campus. The Zopium guys who was acquired by eventually Zendesk, right? They were neighbors, right? 2359, right? I'm not sure if you know that name. It was the first investment by Singtel Innovate when Innovate was founded, and subsequently was acquired by NCS, another Singtel ecosystem, right? And Darius, right, was around that vicinity too. Right, got acquired by McAfee and subsequently Intel. He's now at 99Co, right? And he's also seeded as an angel investor into Carousel and a bunch of people. So the germination of the ecosystem really began there. And it's quite interesting to see how a bunch of kids really, spend 10, 15 years of their lives trying to build the ecosystem, Obviously, there's a lot to unpack. There's a lot of ups and downs. But if I look at that trend line, it's only gone up and to the right, So.
Yeah, and are we at a new inflection point with?
I think so.
Kind of coming to grips with everything and then maybe recalculating?
I think so. I think there's always this feeling that you're waiting for another shoe to drop, right? I mean, before e-fishery happened, I'm sure everyone's reading that headline or have read that headline, right? Even before that, you kind of have this feeling that there's another shoe to drop, right? And now e-fishery has dropped. Now, I think everyone's wondering who's next. You know, there's some rumor has it there are a few candidates, you know.
Yeah, because I think there's this notion that there's been a lot of money pumped in.
Yeah.
And maybe there's a few things that don't quite add up.
Yep.
Yeah.
Yeah, and when market cycles turn, when tides turn, that's where the fault lines start to appear, right? And it's much harder to keep up appearances, right?
Yeah.
You know, I think it's in some sense part and parcel of being in the innovation and capital market cycles, right? I'm sure there are comparable stories during the dot-com boom and bust, right? For one, I'm sure there are comparable stories in 2009 too, right? And I do think it's part and parcel of taking risks and funding innovation. You know, I don't think these are right actors doing the right things, but I do think, you know, we shouldn't punish every market participant just because of a few bad apples.
Agreed.
Right? You know, so if you ask me, I think, well, because of my day job, by definition, I should be an optimist, right? Else I just couldn't get out of bed every day.
You have to.
You have to be an optimist, and I'm net long on innovation, on the creativity of founders and entrepreneurs. In fact, I think in the past 24 months, 2 years, it's been less distracting to invest and work with founders because there's less irrational competition, right? Folks don't buy users anymore using capital. We can have more thoughtful discourse with founders and the path towards building a sustainable business that creates value. Net, I think is healthy.
Yeah, progress.
Do you think, for me, I'm here that less than 2 years.
Yeah.
Do you think, would you like to see more seed investors, ventures, capitals over there? Do you think there is enough?
Yeah.
How do you think this is supposed to be if you want to see more?
Yeah. I think if you take a step back and abstract it to the highest level, the equation I draw, which equates to an ecosystem, it's actually talent x capital, equals ecosystem, right? But I think one thing that drives the circularity of ecosystem is exits, right? You need liquidity for capital to come back. You need liquidity for talent to come back, right? I think on the talent front, if you look at in the 2009, 2010 era, there are very few founders. If you took a job at Facebook, your parents will ask you, "Are you in IT?" Right? It's like, no, in tech. It's like, isn't that IT? Right? I still have that debate with my mom sometimes. But now it's a career, it's a legitimate career choice, right? So to some extent, the talent variable in that equation has been solved. What has yet to be solved, it's the one downs, right? Your first head of sales, customer service, technology, CTO, right? Your product, right? Product management, I think, is still, by the way, a very misunderstood profession, But yeah, so we do need to have that gap filled, right, out here, But would that be solved? I think in time. And by the way, I think one thing I think I didn't mention just now was that for what it's worth, I do think Rocket Internet deserves a lot of credit for really training a cohort of digital talent here.
Yeah, how to grow things.
In Southeast Asia, right? If you trace the lineage for a lot of startups, quite a few of them actually go back to Rocket Internet, right? Yeah. So the talent variable has been, I think, by and large solved at the early stages. That brings me to capital, right? I think Temasek has incubated a cohort of VCs since the 2010s, right? The Jungles of the World, Monksil, Wavemaker, Open Space, they all started as seed investors, and today they are multi-strategy platforms, which is great, right? It's a sign that they've grown alongside with the ecosystem, but we need more, right? For one, we need growth capital, right? Tyro Global and SoftBank hasn't been quite active here, and that's a gap that we see today. Most importantly, liquidity and exits, right? We need a credible IPO path. We need a credible local public market with deep liquidity pools. That's not yet happened yet in this region, right? And I think that's really the last mile to be solved today.
Something that hopefully is getting addressed.
Yep.
Maybe starting to. Yeah.
So I'm net optimistic, right? I'm seeing a lot of efforts from colleagues from the industry, other GPs, really forming alliances, working with MAS here to address that issue. I'm also seeing a lot more efforts from connectivity between ecosystems. How do you work with a big tech corp dev person to look at Southeast Asia, engineering essentially strategic M&As, right? I think there's some ideas there. So
I think it also has become like a open topic for discussion in a much more public and private manner than ever before.
Yep.
Because there was some time of maybe like, you don't talk about this because it would be you're saying something bad about the ecosystem, even if you meant well. But now it's kind of like an open secret, which I think that's progress, though, right?
Yeah, I think so.
Even have the PM addressing it at the budget, like it's out there now to be talked about, and I think that's also progress.
Yeah, I think so. No, I actually that's a good point that you brought up, right? I remember there's a period of time where we need to be founder friendly.
Each other, right?
If you're not founder friendly, you're not a good VC, right? It's like, it's when and now it's like, okay, you're founder friendly, and e-fishery happens. Right? So what are you gonna do, right?
We need company friendly.
Yeah.
Actually, from my point of view, if I always compare to Israel, this is where I'm coming from. So I'm thinking one of the evolutions that I saw in Israel is not just about the capital and the talent, is the focus of what we are creating. So it changed a bit in the past, let's say 5-6 years, but the focus was in the past 2 decades is we know to create technology.
Right.
Yeah. We don't know to be CEOs.
Yeah.
We don't know to scale.
Yeah.
We don't know to sail.
Yeah.
It's the reason we went to the US. They know to scale.
Yeah.
They have the good, marketing persons and sales, but we know to specialize and focus on technology. And maybe this is also one of the missing pieces over here, where we focus in.
I completely agree with you, because I think we do learn a lot as human beings from failures, but I also think we underestimate the lessons we learn from success. And I think what the region lacks right now is seeing success at scale. Right? I think a large part of what makes Silicon Valley work is because we've seen multiple generations of successful companies, and serving as role models for the next generation of entrepreneurs. Right? We haven't really have that yet here.
It's just a handful. Yeah. I think it also helps with the capital cycling. Right? Yeah. It'd be easy to ask you, like, how do you start a venture capital firm? But I don't want to do that so much as to make it more relatable to, like, any sort of inside baseball for you personally on, like, getting Forge off the ground. Like, maybe something that shocked you, maybe something hard that was, you know what I'm saying? Something that people don't, you don't have to bring out any secrets, but just more from, a lot of times people don't hear how this actually gets rolling, right? We just see it come in.
One of the questions that I get asked the most was, where do you find money? you know, and it's one of the most interesting things about starting your own fund/firm. It's one of the only businesses in the world where you need money your product's money, and if you have no money, you have no product, right? Whereas in a operating business, you could build a widget, you can sell the widget, you can get some revenue from sales of widget, and that's proof point to you, right? But for me, to prove that I have something to sell, I need money, and if I don't have money, there's nothing to sell, right? It's a bit of a paradoxical kind of cycle to it. So I think people often underestimate how important the role of luck plays, especially in a lot of things in life, and definitely so in the investment business, I think, right? I was really fortunate, I think, having been through the experience with Seed Plus and Jungle, that gave me a little bit of a background, track record, and credibility that I can draft off and I can point to quite tangibly, for one. Secondly, I could also point to some of the angel investments that I've made, right, as proof points that I know what I'm doing most of the time, and the rest is happenstance, right? Person A, I know he's interested in the work I do. He has liquidity. Hey, why don't you, how can I invest with you? And turning from can I invest with you to can I invest in you, right? And that's a long drawn out process, right? The other thing here is that while performance is really important, and performance, when I talk about funds, we'll use things like MOIC, DPI, right, IRR. Those are important. Relationships are also equally, if not more important, right? The relationships that you have with your limited partners, with your investors, because so much of trust is built on having a good relationship foundation to begin with, right? And I think when things go right, that doesn't matter that much. Relationships are really important when things go wrong.
Yeah.
And you know things will go wrong, right? In a investment management business, you know. And that's where having a good relationship and credibility really helps, you know. And it's a long-term relationship, right? So
did you have a chance to things to go wrong?
Oh yeah, many times, you know. I think part of things go wrong when investments fail, right? Sometimes there are things that are within your control. You make mistakes in selecting the wrong founders to back. You make mistakes in selecting the wrong markets to participate in, right? And you hopefully you learn from that and you learn from that quick. But most of the time, things go wrong for reasons that are entirely out of your control. You know, I remember, so we back a travel company, right? Everything looks great on paper.
And actually was headed the right way.
Headed the right way, you know, stacked cap table, really credible founding team. Yeah. Things could not
Previous
go wrong.
Previous
exit, yeah. Experienced serial founder. Things could not go wrong. And COVID happened.
Yeah.
Mm-hmm.
Right? And COVID happened. And what you got to do, right?
Yeah.
Just what you got to do. Yeah.
Crushed any sort of notion of where you're going, and in no way even to know how you're going to get back there, because no one would know when it was going to end.
Yeah.
Right? So.
And it's moments like that I realized that, you know, if you have some latitude and credibility with your LPs, you've done all you could, and they know you've done all you could, and they trust that you've done all you could, you get more margin of error, right? Yeah. So, yeah.
Yeah, and I guess the one thing because I've talked to other people talk about starting funds, or we know people like, I'm going to start an incubator, accelerator, like, and they'll sit down and give you I'm going to do this and project. And I always tell them, like, that timeline, you should probably double it.
Maybe even triple it.
Yeah. It's going to take you much longer than it. And I'm sure that's your own personal experience from chatting with you. Like,
yes, and compounded with the fact that, so Forge is a seed fund, which means we invest pretty early. We're typically the first capital on the cap table for a company's journey. That also means that the germination period to realize value is really, really long, right? And patience is key. And also ability to withstand illiquidity is key, you know. So.
What's the ticket size usually?
We could lead rounds to invest up to 1 million.
Mm-hmm.
So our strategy is this, right? Southeast Asia could lead rounds to invest up to 1 million, what I call a concentrated portfolio approach, which means portfolio size of about 20 companies, you know, as opposed to 50 or 100. We don't want to take an indexing approach. We do want to take a high conviction approach, right? So to that end, we've built a portfolio of about 18 companies today in Fund 1. We're still investing from Fund 1. And Generalists, we've done investments in consumer, in software, fintech, enterprise, and the last few investments are in climate. There's one that's yet to be announced that we did last December, you know.
Yeah, awesome.
Yeah, we're gonna jump into the family stuff.
Sure.
Yeah.
Ask me the right questions, I'll tell you anything.
Hopefully. You have now 2 kids. How do you run a fund dealing
too
with founders, money, investments, LPs, stress, and still be on track?
You know, I call it ducking it. You know, like how ducks swim. You appear really zen on above water, but you're paddling like mad.
The water's like
I'm ducking it, right? You know, I have 2 kids. Boy 1, 7 years old today, and he just started primary 1 here in Singapore.
Oh, you're going to the get up at an ungodly hour.
Oh God, yeah, that's my life now.
Yeah.
That's my life now.
Mine P1 too this year.
Boy 2, 6 months old. Right, so it's a blessing, really. It's a blessing, and 2 boys and no helper. Right, it's all hands on deck situation all day, every day. You know, it's hard. You know, it's hard. But one thing I do appreciate is I learn a lot from being a parent, and I apply that to portfolio management, vice versa. You know, because so much of, and by the way, we take board seats with the founders that we work with. We tend to take board seats, and a lot of it is really about how do you influence, enable, but not get in the way and manage, right? There's a lot of parallels to being a parent, I think. You know, how do you role model, right? How do you show up consistently, but never, you know, being to, I guess, paternalistic, right? It's a fine balance that is a work in progress for me, but I do take a lot of inspiration and apply it both ways that way, right? I like to I like to say that the job is in terms of working hours really flexible. You can choose any 16-hour day you want to work, right? So
whatever chunks you want, but still 16 hours.
Still 16 hours, because this is intense, right? It really is intense, But I'm also really grateful to have a really supporting partner and a wife at home. She's great, fantastic, Not currently working at the moment. She runs a household, and I'm really grateful for that, And I think the only way to make this work is really have that support system around, Else, I just couldn't imagine any other way for towards making this work. And
yeah, I feel like my mornings now, Monday through Friday, are this clock of just countdown of like, okay, she's up.
Yeah,
I gotta get her dressed.
Yeah, it's just
gotta
like
get the bag packed.
Right,
gotta get to the school on time. And it's like, and then as soon as I drop her, which is normally just on time, which as you know is 7:30, because we get there just on time, and then it's like I ran another gauntlet, and I'm like, it's only Monday. I gotta do this Tuesday, Wednesday, Thursday,
rinse
Friday.
And repeat. Rinse and repeat. But it helps that I like spending time with my sons, plural, right? I kind of look at it as a way to. It's a forcing function for me to disengage from work, if you will. It's they need your attention. They need your full attention. They need your 200% attention, right? And in a really nice way, I think it's a forcing function for me to really disengage from work, right? And I think that's where it's not really about balance, but more integration, right? So
it's a good point. We just had a conversation about it, balancing versus other things.
Yeah,
and. Let's say one of your founders is going to come and say, do you recommend me to have kids?
Yeah, no, it's a tough one. I have founders who have, I want a founder who has 3 daughters, and I have founders who obviously are, finding it a challenge to even date, right? And
they date with the product.
and they call their startup their baby, right? Imagine that. It's hard, right? It's hard. I think at the end of the day, it really is about balancing So here's one thing I kind of learned through the years, right? I didn't quite believe it when I was younger, but now I appreciate it more. It's this whole concept of seasons of life. I think there are right ways to prioritize when you're in a certain season of life, right? And you have to recognize that when you're in a different season of life, you have to prioritize in a different way, and that's just a fact of life, right? But if you choose to prioritize in a different way, you have to recognize that there are trade-offs and opportunity cost. I think the discontentment and unhappiness tend to happen when people do not understand nor realize the opportunity cost that they are trading it for. That's when the misalignment happens, right? But if you do it knowingly, at least you know you're paying the cost for certain things, right?
Yeah, and I think it's kind of immutable, right? Like if it's winter now, if that's the analogy, and I want to wear my summer clothes, it's just not going to work. I gotta.
But that's a great analogy.
And I because that's how I think about things. So no, I can't do this like I used to because she's at that age, and you just accept it. Right?
And I think acceptance is the first key to unlocking a lot of contentment, I guess.
Just less pain.
Less pain. Yeah.
We did this at Seed Plus, and I'm curious how you think about this for Forge, and it also kind of relates to even the family stuff. Like, we kind of had this high operating model. We tried, let's say, like that was a goal of ours. And I think you talk about that with your Forge stuff about kind of portfolio founders and what you do to help and at Seed Place. Like, I'm assuming you still do a lot of that because I know a lot of your interactions is how much you're helping. But how do you kind of embody that, and what's your goal there when it comes to the fund? Yeah,
for sure. I think one thing that I have a greater appreciation for as time goes by, and it's especially true today in today's environment, it's what it means to be a board partner for founders, right? It's more than just, signing documents and showing up at board meetings, but also over time you deepen your understanding of the product, the environment that the business operates, getting to know the founders and founding team better, gain credibility and trust, and really work with the founders and founding team, right, on everything from strategy, roadmap, to coaching if that's needed, right, to career counsels, to marriage counseling, and all that. It's a very human process, right? Definitely introductions, whether it's fundraising purposes, BD, partnerships, sales, right? Recruiting, all the above, I think the key here is really showing up. Because so much of what I don't like about board meetings today, sometimes it's showing up at a board meeting and it becomes a reporting session. And you spend the first 30 minutes, even an hour of the 2-hour board meeting just to catch each other up to speed. Wasted time, right? Where my philosophy is you show up at board meetings and so first of all, very precious time together, high fidelity communication, and you use that high fidelity time to solve problems. And the pre-work of that board meeting should have been done by then, right? And that includes reporting, understanding the numbers, understanding past decisions being made. We're here to make certain decisions, and just showing up, which I try to practice in every board that I'm on, and definitely every interaction I have with founders. And the other thing here is that I think the fallacy here is that you actually do not need to be the expert in the room, but just by showing up and asking the right questions, it gives the founder the space and time to really think about the business in a more strategic way, right? And that's huge value unlock, I think.
Yeah, and I think it's, correct me if I'm wrong, it's kind of like as a practitioner, you get better at this.
Yeah.
As you go, right? Like,
yeah, one would hope.
Yeah, but you know what I'm saying? Like when you first did it, I mean, I don't know whether your angel investment probably started with Seed Plus, right? Where you're officially on boards and doing stuff.
Yeah.
I remember I was like, God, there was no school for this. I mean, I could maybe attended SID's board thing, but it's all very like...
Yeah, like check the box.
Yeah, exactly. It's not... It doesn't give you that experience. And I think over time you probably realize what they really mean and how you can influence them.
Exactly.
It's like a craft. I'm sure you've
It is a craft, and just like there's no school for parenting.
Yeah.
Right. And I think that's the other thing. I think one thing that I benefited really early on in my venture career was stumbling upon content created by Brett Felt.
Yeah, it's good.
It's an amazing contributor to the ecosystem. Fred Wilson, right? Besides really learning and getting a peek behind the curtain of what it means to be a VC, it's also in some weird sense they gave me a permission to realize that there's no one right way to be a great VC.
Yeah.
Right? There's no one way to be a great parent. You do what you think is right. You be principled about it, and you be consistent about it, and that in itself it's very valuable.
And you'll make mistakes.
And you'll make mistakes, and hopefully you learn from them, right?
Yeah.
I think it's a muscle. It's a muscle that you build, even if there was a course.
Yeah.
It's something that if you do again and again and again, then
reps. You need reps. You need to put in reps.
Yeah.
I've met a lot of new faces joining the industry over the years, and one advice I always give them is because one favorite question for everyone is how do I get better at this fast? The irony is that you can get better at a lot of things, but you can't get better at pattern recognition fast because you need reps, right? It's just like you can't learn swimming by watching YouTube. You actually have to swim.
I think it's my only favorite Andy Jassy quote.
Yeah.
Pretty sure it's him. There's no compression algorithm for time.
For time. Yeah, that's right. Yeah.
No matter how much you want to. So I want to read a little thing from your blog because I think it hit home with us and a lot of things.
Thanks for paying attention.
I do. Your now thing or happening now thing hasn't been updated since 2022, but you might want to take it off. But all right, so let me read this because I think it's pretty poignant.
Good one.
I think this is more crucial than ever in times of stress, which the Southeast Asia venture ecosystem seems to be experiencing in spades now, with founder fraud, poor VC performance, and uncertain global market. Some companies will fail, and many will fail to live up to expectations. Unfortunately, in these times, we see more actors misbehaving and optimizing for short-term outcomes rather than long-term ones. It's not the whole blog, but I think that's the essence of what I'd like to get to. You're a part of this ecosystem, right? You're one of the VCs in it. What given what you just said and what you think is happening, what do you do or could do and would suggest to other VCs to be a light of making a difference, right?
Right.
Because it's a tough time, right?
It is a tough time. Yeah. There's a lot to unpack here, right? I think one of the guiding principles I have in, again, being a partner to founders is this concept of being a counterweight, to founders. So what I mean by that, when times are good, don't try to damper the mood, right? But when times are bad, try to be optimistic, because we all know entrepreneurship is hard. And I think the role of a board member and partner to founders is to make sure that in times of exuberance, it doesn't go irrational, right? But when times are really negative, you try to keep the hope alive, right? I think it really is that. I've never really believed in the notion of founder friendly, because I think sometimes that creates unintended consequences. I do believe in the notion of founder focus. What that really means is that, again, Brett Feld, he taught me by reading his book that one decision that you make at every board meeting.
Which one is that? Which book? He's got a couple.
I don't know, one of the blog posts maybe.
Okay.
So he taught me that one decision that you make at every board meeting is to decide whether you would continue to back the CEO. Because there will come a time where that question is less certain, right? And when that question is no, and no consecutively, you need to be realistic and make certain decisions. And it's not bad for the founder or CEO necessarily, but that it's the right thing to do, right? Because it's principle, right? It's being principled, And just coming back to the question here, and I think especially in times like this, you have to be principled, right? And continue to ask yourself, what's the right thing to do, And you have certain responsibilities as a board partner, besides being fiduciary guardian to shareholders and cap table. You also have fiduciary duties to your LPs, right? And those have to align, or at least you find a way to least misalign, right?
It's a struggle.
Yeah, it is a struggle.
Yeah, we talked about this with Jeremy Tan, like the whole like knowing your docs, and as a VC, like spending some time in that. And I always think of this, we both remember Jay Wan, and who's a lawyer in the VC, who taught me a lot about, print the print the thing, get your pencil out, read it, make sure you understand it, mark it up. But one of the things, because you keep saying founder friendly, and I think one of the things that he taught me that kind of resonates, this notion of like company friendly docs, where it's like, hey, companies should live past the founder, they should live past the VC. They're the breathing entity. It's not like it's founder friendly or VC friendly. It's company friendly. And that opened my eyes to like, that's actually the right answer, because it's supposed to be a healthy,
what
thriving
happens to
company.
Customers, right? What happens to
because the company's servicing the customers,
vendors, right? We all know a few companies that blew up in fantastic fashion, and vendors that owe money and all that, right? So what happens to those?
And I think about almost, shockingly, every instance of fraud that you could describe to me would go against company friendly theories. Because you're damaging the company.
You're damaging the company. That's right. That's right. And here's another notion. I believe in investing in behind the careers of founders, right? And if you invest behind the right individual, maybe the first idea doesn't succeed, or maybe you don't like the first idea, so you pass, right? But you invest in the relationship, you take on the notion that you're investing behind a career of a founder. And if you take a long-term view of the ecosystem, I think that's where the long-term alignment happens and kick in, right? So quite a few of the portfolio companies that we have today, they are founders that we've known from before. I've worked with from before. I've invested in from before, right? They come back second time, third time, and I get to participate. It's a great journey.
Yeah. Just before we wrap up, I have to say that it's one of the things that I wish that most of the VCs would think that way. I'm not thinking that all of them. I'm thinking that, hey, I'm investing in the career of the person that's going to build something for the benefit of both of us.
Yeah.
Some of them, they see a trend. Okay, this is a great trend. Maybe you shift over there because I think this is what's going to catch. I think it's not sustainable, so I'm fully...
Yeah, and not everything has to be, AI, right? For what?
Hey, we didn't say
hey, we did good. 45 minutes in, we didn't say. We're getting something. No, yeah, you $10, but we're getting better at that. Yeah. Unless I made an episode that way. Unless this product is about AI, then we would have to talk about it very quickly. But we've been doing better about how long it takes to get to AI. So good job.
It was fun.
Yeah.
We can.
I think we'll do one quick question and then you get to the closers, because we've been trying to do this. Let's leave on a good note.
Oh yeah.
What are you excited about in the ecosystem? And then we'll get to our closers. I think it's important to end with positivity.
Yeah, no, I do think that. It's actually a fascinating time to be a builder. I mean, I have to talk about AI, right? I'm sure you are playing with some of the products. Yeah. You're trying to build some of the products
Granola
yourself.
is my new favorite product right now.
And dude, it's fascinating to be a builder today, right? I'm really excited actually by some of the ideas and some of the prototypes, some of the actual commercial products in production are that we use ourselves as a firm today. It's such a good time to be alive, actually. It's really exciting.
Yeah.
One question that I consistently ask every portfolio company at board meetings now, it's this question of, if you were to rebuild X today, given what you know in the past 24 months about Gen AI and LLM, how would you rebuild X today? Because that's such a question, profound question that I think everyone needs to think about, right? You know, talk about tech debt, sunk cost fallacy, disruption from new upstarts, and it behooves you to really think about that and ask yourself that question.
You do that in a board meeting? That's a hardcore question, because you could imagine some things, unfortunately, it'd be like tearing up and starting over with AI might actually...
Yeah.
But I think maybe you're sending Evernotes before and then they're not surprised.
Pre-work.
Okay, closures.
Yes, let's do it.
Okay, so we have our usual question that we ask. Let's say that you are going back to your 20 years old.
Oh, that's embarrassing.
Sorry?
That's so embarrassing. I would say get a better haircut. You know? Looking at my 20-year-old photo, I was like, oh, that's so embarrassing. You know.
So beside the haircut, what would you tell him that you know now?
Yeah. One thing that I would really say is I didn't really understand the concept of asymmetric risk taking back then, right? So what does that mean? I miss a lot of non-symmetric upside during that time, you know. For example, I was shown this wonderful little magic internet money called Bitcoin in 2010. Oh, God. You know? And I was like, what's this? Oh, you know, why don't you like put in $100? And then it's like, it's too hard. You have to spin out your own wallet, blah, blah, blah. It's too weird. I don't get it, right? You know, didn't appreciate the fact that I could only lose $100. Yeah. You know,
or make.
Right. Right. And yeah, so just little opportunities like that in life, right? That really think about how do you quantify and understand risk better. You know, that's something that
That's a good note. Almost our risk aversion starts early.
Yes.
We're connected on fitness with Apple Watch, so sometimes I know what you're doing for your health and fitness. But let's ask the question, because it's a two-part, like mental, physical. Right. Gets tougher as you get older. Now you get the kids, running and fun. How do you keep it all together?
I'm really into long distance running now. You know, I try to do 15-20 kilometers per week. Running the half marathon is an annual affair right now. My timing's getting better, and I think that's really reorient my life in a really healthy way. You know, if I'm so, for example, if I'm drinking, I'm not sleeping well. If I'm not sleeping well, I can't run well. Yeah. Right. But if I need to run, I have to sleep well. If I need to sleep well, I'm not drinking. And there's like a positive kind of to it. Right. One unintended consequence is, besides you looking better, you know, it's long distance running gave me time and space to practice active meditation. I don't really listen to anything when I run. It's just me, my heartbeat, and the footsteps, you know. So it really forces me to pay attention to my body, my posture, me pounding the pavements and being in the present. I think that's a really wonderful meditative practice. It doesn't take long. It's like an hour-ish, right, for a 10 click. So
yeah. I think I always had that argument. Some people talk about meditation. Like some of us, you know, gym and headphones. Yeah, I'm meditating. Yeah, because no one's bugging me and I'm in my head. Yeah, and I think you're the same with running, right? So
yeah, for me, I'm the same for years now. Yeah. But the moment I'm start to meditate is around 20 minutes. Yeah. And then I switch from the podcast to music. And then music, I know the music. That get the rhythm of my mind start to flow.
So you don't think about it, right?
Yeah. Yeah, I know my body already. I'm doing it for 15 years. So, and then I'm disconnected. One time I almost hit a wall, by the way. Anyway.
It's good.
Could be dangerous.
Could be dangerous.
Good. good stuff.
Yeah. So anything recently that you read, like books or TV show that you watched that you want to share?
No, it's pretty embarrassing, but I only recently discovered Charlie Munger's book, Poor Charlie's Almanac. It's such a good read, you know. I know it's been around for a while, and you know, and it's really respected. I watch some of his speeches once in a while, but you know, Stripe published the Stripe Press, and I picked one up, and it's timeless, like you said, right? And I'm really inspired by it. I think the other false kind of narrative here is that Charlie, Warren, they are value investors. What's a VC gotta have to learn from them, right? But you know, if you really think about it, a lot of the principles are applicable in a lot of areas of investing, and dare I say life. You know, highly encourage everyone to pick it up. You know, lots of good lessons inside. So
I keep trying to get it every time I go there. It's out, but yeah,
Amazon, man.
No, it doesn't. They never have copies of it. Like,
no,
maybe they're back for.
There's Kindle.
They come
version.
and go. Yeah, there's Kindle. I want to get the actual book.
I also pick up the hardcover version because I think it's worth it.
Yeah,
so
it's a good item to collect.
It's a good one. It's a good one.
Awesome. Thank you, sir.
Thank you so much
Thanks
for
having
coming.
me. Yeah.
Good luck with the primary school run and the fund. And thanks for making the time.
Yeah. Thank
luck.
you. Thanks for having me.
Yeah. Thank you.